Good afternoon and good morning. My name is Jeff Tucker. I'm a CEO of Tucker Company Worldwide and also a company called qualifiedcarriers.com. And I'm here to share some pretty interesting figures that we've have gathered over now 12 years straight, every single month, every single day, creating quite a large database, and I think an unparalleled database of what happens in the motor carrier industry. So, as an example, we get data from every single for-hire motor carrier from the Federal Motor Carrier Safety Administration every month, 2 different cycles every month, so twice a month, I guess you could call that. And then we filter that every single day against the active licenses and insurance, the L, we call the L&I. So, no surprise, right, that the marketplace has been in kind of a state of turmoil now for about a year. And then if you can go back, of course, summer of 2020, once the COVID dip happened, it went pretty crazy in our truckload market and the trucking overall freight markets. So we're going to kind of get into some of that information, some of that material. We've been watching this every single month, and we've been one of those folks, those few folks out there, laughed off stage, often when we talk about there's not a driver shortage nationally as a marketplace. There is not a driver shortage, never has been. If you're a large carrier, you've got a driver shortage, but that's a different kind of shortage. So we're going to talk a lot about that here in the next few minutes, and really what can you expect. And we know that rates from contract side of things and also the spot market is nearly disappeared when you compare it to the last couple of years. We're going to talk a little bit about that. So hang on to your hats, and we'll go to the next slide. So so this what I'm about to share is pretty remarkable, and I'll say that maybe the data is not perfect because, again, the data is reliant upon data that is in Federal Motor Carrier Safety Administration's databases, and 3 different databases, again, that we collect every single month and sift every day to come up with these numbers, right? So they're a snapshot every single month of we have data. We're not going to get into it, but we've got data on the number of tractors, number of trailers owned, trailers leased nationally in different segments of carrier size and everything else. We're really just going to kind of stick with what does the market look like as a whole. So real quick, I'll just ask you just kind of rules before we or suggestions before we start. There is a chat, a Q&A area, and I'll just ask you that as you see data or as you have questions throughout this presentation, use the Q&A. And just as reference, this is a 15-minute long maximum presentation by me, just me today, and a maximum of 15 minutes Q&A. Happy to, if we don't get to all the Q&A, happy to reply. And then, of course, we've got our next webinar date that will be on the last slide, where we'll talk about another topic. May come back to this one because it's still kind of exciting and interesting and fascinating. So, we're going to see kind of where this goes. But I'm hopeful that we're kind of reaching an equilibrium, but we're not sure yet. So, next slide will give you some insight here. So this is not news, and I only provided this slide, and this is what we, one of the gold standards, I suppose, that Tucker Company uses when we're trying to think about what's happening in the marketplace. And the blue line at the top, the highest line there at the top is what was happening in 2022, and the pink line, as you see, was 2018. That was kind of like the last capacity crisis before COVID's capacity crisis. And the pink line is a pretty big deal in 2018, but really, you take a look at 2020 is the light blue line, about halfway through the year. That light blue line represented about the worst capacity, or equal to or greater than the worst capacity crisis we've ever had. Then you follow the line, the green line, which spent almost all of its time higher than 2018. And again, it is really hard to imagine. It's hard to describe, and I find myself using different examples to describe the chaos that COVID and the global supply chain disruptions created on trucking. But I only bring this up to show you that, look, the last 2 to 3 years were extraordinary in so many ways. But now you take a look at that blue line, that 2022, we reached ridiculous peak in early of 2022. And it has been a very gradual decline back to normalcy, and you might say back to below normalcy. That normalcy is the average, there's the black line there with the triangles. So again, this is a demand, the Morgan Stanley Dry Van Truckload Freight Index. You can sign up to receive this every other Wednesday yourself. And if you're interested, there's many pages, lots of information, but we'll move on to the next slide, just kind of as a reminder where we came from. Again, this is FMCSA data, and this is pretty stunning. The huge numbers reflected in active for-hire motor carriers, roughly 12-13% down in both categories. From May to May. Now we get the May numbers in June. So the study that we did, and that Journal of Commerce will be publishing, I believe, today, gets into a lot more detail. But nearly, well, a little over 500,000 drivers are not in the system today versus this time last year. We're going to show you a chart on that in just a second. 47,200 carriers left the market, or net change, a net change, let's call it. So maybe a lot more left. Of course, we know that each month carriers are coming into the industry. So these numbers represent a net change overall, which is an indicator of what's happening in the marketplace. But my commentary here in the second bullet is that I don't think we're there yet. I think we're still maybe oversupplied in drivers. I hope not, but and carriers. But I think we're getting close. But even with those staggering drops in carrier counts and driver counts in FMCSA database, we're still over 2020 levels, and in 2020 those were record high numbers. So another thing that we're going to touch on here is that carriers keep getting smaller. Yeah, the things that get the press are and have been, the mega mergers. But if you're a large carrier, and I won't name the large carriers. But if you're a large carrier, really the only way you can grow in any significant way, shape, or form in today's marketplace, in today's world, and we'll get into why in just a moment, is to buy another carrier. It's drivers do not want to drive. The drivers that are entering a marketplace are driving for themselves, or what we call micro-size fleets. We'll get into the chart in the next slide. This is that data. So we've got drivers is the orange line, and then the bar charts are the number of carriers. Drivers on the right-hand side account, and then motor carrier counts on the left. And as you can see, and we've been talking about this again for 12 years straight, about the number of drivers has been increasing steadily. Also, the number of motor carriers has been increasing steadily over really the last decade and more. We took a slight dip in 2017 there, but even with the extraordinary loss of drivers, extraordinary loss of motor carriers, we're still higher, as I said, higher than 2020. Hey, we're actually higher than 2021. So, in both counts. Well, let's see, excuse me, higher in carrier counts, lower in driver counts, excuse me, than 2021. So both counts higher than 2020. And we just got a little bit of news flash with our data yesterday, I think it was, and we'll see that here at the bottom. Next, there we go. So the trend downward continues in both carrier count and driver count. You can see we lost, 2,000, 1,500 drivers. So it's the drop is a little bit less significant month to month. So again, it feels like we're reaching, that bottom, that new equilibrium, whatever that we want to call that. And then, of course, on the carrier side of things, that 335 lost 3,000 carriers net. Again, you can see the number of carriers that are being activated each month, and those are probably more than 3,000. But in a particular month, let's say, but these are what we're talking about is net. The net changes in overall numbers of active and for hire carriers. We exclude carriers. What are exclusions? We exclude carriers that are privately held and don't move freight for other parties, so without an MC number. We exclude bus drivers. They don't fit into the for hire motor carrier. And then if your license is active, but your insurance is not, that is not an active carrier. The Federal Motor Carrier Safety Administrations, if you ask a database, if you ask them the number of for hire motor carriers, it's higher than ours, but their definition of active is not our definition. Our definition is, tell me the carriers I could hire today, authorized to haul today in every way, shape, and form that I need and the government needs. FMCSA includes carriers maybe whose license expired or insurance is not up to date, proof of insurance is not up to date, that kind of thing. Okay, next slide. This is just a different, we decided to take a kind of a look and cross-reference the number of drivers in the marketplace. And again, this constitutes every driver from owner-operator to someone that works for one of the largest truckload carriers and everyone in between. So you can kind of see where the truck tonnage index took a dip in 2020, and we all know what happened in early 2020 and most of the first half of 2020 with COVID, right? So everything took a dip. So we saw that happen with the truck tonnage. But interestingly enough, again, this is an annual look. The 2020 and 2021 saw a net increase in drivers. What we see here, though, is every single year, and again, I am not an economist. I play one here at work, and I feel like I do a decent enough job. But one of the things that we see here is that every year, this, from a scale point of view, you see the drivers well below the freight tonnage index, and you kind of see the drop, right, from 2022 to 2023. But we're still, again, I think a lot of people, talk to a lot of people in this industry, a lot of us sense that we're still maybe in an oversupply marketplace. Go to the next slide. So kind of close with a couple ideas. We hear every time there's capacity crisis, shippers will say things like, hey, I need to be more asset based in my next bid. And what our sense is there is, and our experience is, it's exactly the wrong impulse. If that is your impulse, you're not reading the data properly, and you're not setting yourself up for what's a more durable. In addition, the carriers who have come to support you, the small, medium-sized carriers that come to support you through, brokerage operation, or even a carrier's brokerage operation. Those carriers are asset-based, and they have dedicated they built their whole system around serving your business, toward the end of that capacity crisis. And then we go to the largest asset-based carriers, and that sets up the next capacity crisis. And that's really kind of where we're going next. These truckload, I think everyone that's an analyst, an economist, a writer, a participant knows the truckload industry is way more cyclical than it ever has been. Every couple of years, we've got a capacity crisis. And with those drops in driver numbers and those drops in carrier numbers and the low prices that exist in the marketplace today, one is right around the corner. So what are you doing? Next slide. To access that capacity. Here's just one more data point. This is the average drivers per trucking company. Again, you would think with these huge, large trucking companies out there, you would see a blip up. What we're seeing a dip down, it's at the lowest point it has been in 11 years. And what's really interesting to me, and I think it's try to absorb this, is in my experience in past capacity crises, you've got a lot of drivers who flock to the big carriers, right? Flock to the big carriers for protection. That ain't happening today. At least it is, but it's not in the same velocity, same frequency, or same volume, right, as it has in the past. And there's a lot of reasons for that, I think. But a couple things come to mind. They had the best years they have ever had, period. Every single carrier out there. Rates and the returns and the operating ratios, the best ever. It's going to take years to find an operating ratio like that for most motor carriers, right? But secondly, for the smaller fleets, more and more technology is in the palm of their hand to run their business, and the way down is way softer for them than it ever was before. So a lot of things have changed, but I guess we'll go to the next slide. So just kind of in summary, and we'll go to questions now. In summary, I think you really, if you're thinking about this from a network design standpoint, if you're a shipper or as a broker, you've got to be thinking about a balance, right? You've got to be thinking about, because if what happens is when you go all quote unquote asset based at the end of capacity crisis, you rip the rug out beneath what is running nice and smoothly. You rip the rug up beneath it. Those carriers that are now wound into your system and providing high on time, and they're gone. And then when you need them, they're gone. They're moving something somewhere else, and you really become the child who cried wolf, right? Too often, and when they come back, they're not quite as energized to come back. So a lot of interesting things here, and we could talk for hours. But we're going to move to the questions here. So, it says, how can it be a net change when you only mention how many drivers and carriers exited? You do not illustrate those that joined. That's exactly how it's a net. Those numbers are. I'm not showing the number of increase. There's a lot of folks out there who, whether economists or analysts, who report on the number of bankruptcies, and they call the number of bankruptcies an indicator. And yeah, it's an indicator, but to me, it's never mattered. Of course, it matters to the individual or the company going bankrupt, but it's never mattered to me. Because there's always companies that are just not going to be well run, and they're going to go out of business, and they deserve to go out of business in those cases. It's not well run. What I'm always looking for is just give me the count. So back to we say, okay, show me all the DOT carriers in the system, period. That's like probably a couple million. Then we whittle that down to just show me those with MC numbers. Right, way smaller. MC number indicates it's for higher motor carrier. Okay, that number is way too big, and it is not accurate. Then we say, okay, then we go to a filter, and we filter on show me just that segment of motor carrier with an MC number, DOT number, and MC number. So these are interstate motor carriers. Say, okay, just show me the ones with the L and I, their license and proof of insurance that are active. So our number is a continual snapshot of how many carriers, how many drivers. And again, we've got all kind of data beneath it in terms of drivers that drive for different size fleet sizes. We've got drivers who drive, we've got number of tractors owned by fleet size, number of trailers owned, trailers leased. There's all kind of data that we have as well. This is just the high line total net number of drivers, net number of carriers at any point in time. Is the reduction of drivers and carriers in response to demand? Has demand gone down the last 12 months? Yes, and yes. Demand has gone down dramatically, again, because there was such a run-up in carriers and drivers. I always like to think of the former Fed chair, Ben Bernanke's famous quote of irrational exuberance. Every time we see a capacity crisis go on, and they usually last 18 months or so. This one lasted 2 years solid. Drivers coming in coming into the market out of the woodwork, right? And we see that in the data. There's no question. We've seen that in the data. And in this case, it was extreme levels of pay, unheard of levels of pay in the spot market that drove carriers in. So yeah, no. And then once supply chains leveled out, once manufacturers and importers got their supply chains more predictable, you could kind of control your network way better. And we're almost back to the levels of control, network control. In terms of your on-time performance, we're almost back to, what we experienced before COVID, almost. I don't think supply chains are quite there yet, but they're way better than they have been anytime in the last 2 years. So the urgency, the desperation that many shippers felt when one shipper was outbidding another for capacity, that's all gone, right? And we're definitely in a softer market. What is our average driver count? I think we just I think the data showed it was 9.6. Jane, if you want to share that screen again and go back to that last data slide. If you break out the net figures, do you see any interesting turnover trends, particular carrier or haul types? Yeah, that's a great question. And no, well, yes and no. I didn't get into it on this in this deck, but you see extraordinary. Let's just talk about it in size of carrier. You see extraordinary growth, and in the small fleets at the expense of the middle-sized fleets. So like the 100 to 500 truck, those folks have suffered and just are not. They're not growing at nearly the pace of the small 1 to 100 truck size fleets. I've given this statistic numerous times, but it begs repeating. The average size carrier in the 1 to 100 truck fleets, and what we call truck is a tractor. How many tractors does the carrier have? The average size fleet is about 5 trucks, 5.2 trucks per fleet in that. So it's not, you think it'd be somewhere in the 40s or 50s. It's really small. I hope that answers the question. I did not break it into. We don't have it broken into like flatbed versus bulk, tanker. We just haven't done that. Not to say that it couldn't be done. Hasn't been in our level of interest, I suppose. Let's say the market is in the progress of bottoming and capacity continues to be purged, what sort of recovery can be expected in 2024? I think it's yeah, it's a good question. I think that we're darn near close. The numbers that just came out on inflation are encouraging for goods. However, we get a lot of our goods from China, and China's export data does not look good at all. And folks are downgrading their predictions for China's exports. So much is really in the air. But all things being equal, what I expect is you start to see tender rejections increase. And again, with fewer of those large motor carriers, large asset-based carriers to rely upon today, and more than 50% of all drivers drive for that micro 5 truck fleets, right? 1 to 100. More than 50% drive for them, right? And that's really important. More than 50% of all drivers drive for them. That's unheard of. A decade ago, it was maybe 30%. Unheard of. And again, so I just, it has to sink in if you're a network design person, a procurement person, transportation management person in your organization, you cannot depend on those large carriers to bail you out. Maybe right now because it's soft, but that will change. And everyone likes to say, oh, they're my partners, they're not going to, well, they're the same partners, right, that saw tender rejection rates go to 32% for periods of time, and way over 25% for a lot of the last 2 years, driving a ridiculous spot market. So, when the worm turns, yeah, you'll start to see those tender rejections. Carriers won't be in the right place at the right time. You'll start to see, the spot market come back. And you really have to ask yourself, if you're in network design, is this the where I want to be every other year? Because that's the frequency it's happening. What can you do to balance that out? And you absolutely positively have to work with, competent brokerage that can give you capacity that's, maybe that's not owner operator capacity, maybe it is, but capacity that sees your business as part of their network. Tepid recovery or more robust recovery. It so much depends. I mean, you're looking at, YRC's troubles right now. A major jolt, like a YRC bellying up, and of course they just got a little bit more funding or a little bit more support. But UPS strike, any of these things could, and prolonged, could be that impetus, that catapult. Bad hurricane seasons even can lay into months of capacity. So I try not to predict, and just try to be ready and understand, what we've seen in the past, and again, utilize this data. Hard to say. Does qualified carriers cover the number of hazmat trailers by a carrier? Yeah, we could sift that down. We have all the carriers that are hazmat certified, and we'd just be able to filter that down. Do I have that handy? No, I don't. Have I ever done that? No, I haven't. But we've got all the data over, like I said, over about 12 years. 2 questions here left. It looks like, what's the location for the Morgan Stanley data? I would just look up, maybe we could drop it in, maybe Jane could drop it in the chat here, but I would look up Morgan Stanley dry van index, truckload index, and see if you can find it. We can, with the follow-up, we'll include a link if you want to get that. With your position, oh, I just lost it. Oh, I didn't see the second question. I'm sorry. Did COVID generate an increase in carriers, and the vaccine, as the vaccine distribution decreased, those carriers left the market? Could that be part of the decrease in carriers? I would say that the number of carriers and or brokers, and we were one of them, that were participating in the vaccine, push, were very, very, very limited. even if you were, working with some of the packaging companies, and whether it's active or passive, temp control packaging companies, very small group of forwarders, very small group of carriers and brokers. So, but the answer, I think, is definitely an affirmative in terms of the number of drivers and carriers that came into the marketplace because of the supply chain disruption of COVID is most definitely the reason. Again, I can't emphasize it enough. Networks for every motor carrier period were upended. Networks for brokers. Look, I've got networks. I've got a lot of dedicated, a lot of contract business that I've served for 10, 15 years with almost no, rate changes. All that got disrupted, and no one was strong enough, no one was powerful enough to not see that disrupted. You think, okay, yeah, my guys kept the same prices, yeah, but they weren't there 20% of the time, they weren't there 30% of the time. So what good is that, right? So, really major change, major disruption, and I think that was and that disruption created huge prices, and folks ran after it. I think we're just 1 minute over, so I'll try to answer the questions that remain in follow up. And I do have a hard stop myself here, so I wish you guys, everyone that came, appreciate you being here, and thank you for your interest, thank you for your questions, thank you for your remarks, and yeah, we've got a really great and interesting sustainability opportunity that we're going to be talking about next time. Something that is absolutely concrete, that will go a long way to any company's sustainability goals, and it's something I think that your company and your shareholders and your customers can be pretty darn happy with, and so much so that I hope that it'll land on your social media for participating in it. So thanks everyone, and we'll see you next time.